Hi, everybody. Welcome to the Trade of the Week. My name is Lee Goldstein, the Trade Room Director at 10 Minute Trades. Sometimes the Trade of the Week is just the trade we made the most money on, but other times, like this week, it might be the fish that got away. So let me show you both. It was a very strange week this week, and possibly because of the war in Ukraine, is creating a lot of uncertainty and volatility, unexpected moves in these markets. There's no question. So our trade of the week, because we made some money, was the FOMC. What's interesting is, as you'll see, our original setup didn't get filled. For this FOMC statement trade, I had what I felt was a fantastic setup. Possibly our entry at 1400 hours exactly instead of 1 second before, maybe that was the reason we didn't get filled. I'm not so sure, because look how fast that move was. The move was so dramatically fast. In other words, the candle is on the chart in less than a nanosecond. Sometimes when a market moves so fast, it will jump your orders and not fill you. Now, if it was only me that didn't get filled, then I would have thought to myself, maybe it wasn't the speed, maybe it was the entry time. But every single person, except maybe one that traded live, did not get filled. It's almost always the speed of the market move that will jump the orders. So we didn't get filled. It would have been a fantastic setup. Although here's something to understand. Sometimes when a move is that fast, instead of getting filled high up on the candle, and then as it goes in your direction, it hits your targets, because the move is so fast, it could actually fill you at the bottom of the candle, the worst place. And then you see how it pulls back? That could create a stop out. So those are things to just understand about fast moving market trades. So in this instance, I was disappointed I didn't get filled, but I had a plan that I was very interested in possibly trading after the Fed news using our software and a different setup than a breakout. I was using the tick strike indicator to help me. You could see I had a quick scalp setup, and my first scalp got stopped out. So I'm now down, a couple of $275. I had a second trade I put on. Bingo. Very fast. Hits both my targets. And then I had a third trade that I put on, and that trade hit my targets. So we wound up with almost a $300 profit. I had an after the news scalp setup. So to recap, my first trade was a stop, and my subsequent two trades were profits. So we made almost about $300 on the FOMC trading after the news, which is something we are starting to do, and we're planning on doing more and more. But here's what's interesting. What really was the trade of the week? I think it was the fish that got away. So what do I mean by the fish that got away? Well, the fish that got away is the trade that I didn't trade because I woke up not feeling well Thursday morning, and I changed our schedule. I just wasn't feeling right. I didn't feel that I could trade properly and run the trade room. There's our orders. The Bank of England rate statement explodes to the downside. It would have been an easy, mega $100 profitable trade. I was watching it, feeling awful. I had used a 100 tick target. I probably would have used a 50 in the trade room, and it would have been a beautiful trade. So the trade of the week was the fish that got away because I wasn't feeling well and we didn't trade it. So I hope you enjoyed this. We had two trades of the week, the FOMC with our aftermarket trade setups, and the Bank of England, which really looked like it would have been a great one. So I hope you enjoyed these weekly Trade of the Week videos as much as I enjoy making them, and I'll see you next week in the next video. Have a great weekend, and I'll see you in the trade room.